And thank you to the RE corporate team for another fantastic event. Thank you all for attending today. The ROC story is something that I've been a part of now for almost 2 years. It's been a big journey where we've been able to consolidate this asset and now get this project on the verge of progressing through the development phase. And it is a high-grade development. It is a high-grade gold resource. The project has 2.3 million ounces at 4.4 grams a tonne. It is much higher grade than many of our peers, and the scale of this asset is not to be underestimated. It sits within a 1.5 kilometre strike length, and it's one project. This isn't multiple open pits or underground spread across, varying kilometres. This is all one area that will be right under a potential mill site. We've got a mine plan that shows we'll produce 786,000 ounces of gold doré over a 7.7-year production life and an average about 100,000 ounces per annum. There is the potential to continue to grow that. We are looking at options to continue to drill this ore body and expand upon that production profile. We moved forward in 2022 and we drilled out this asset and we increased the scoping study from 70,000 ounces per annum to now 100,000 ounces per annum in the PFS, and I still think there's potential to continue to grow this asset. We have a very low all-in sustaining cost. The grade is what drives this. At $1,676 an ounce, we'll definitely be one of the lowest producers of gold on the ASX, and at these current gold prices, you're talking about $1.3 billion of free cash flow this project will generate. That's $200 million free cash flow a year. And we've got a strong shareholder base, Venus Metals, who come back as part of the transaction to acquire their 30% interest. They hold about 15% of the company. Hawke's Point, they're a strong investor who continue to look for value within the market. They have only a handful of investments, and you can rattle off their successes being Capricorn, Ora Banda, and Rox will soon to be one. They're strong shareholder supporters, and they look at deep value of these assets, and they'll continue to support the company as we go through this development profile and as we continue to move forward into production. And UME is located in the Murchison district. That's a hotbed of M&A activity at the moment. UME is probably one of the only assets within this district that has the scalability to be a standalone asset. The resource is high grade and it's 2.3 million ounces over a 1.5 kilometre strike length, and it still has the potential to grow. In the southern area of the project, where we had the Paddy's discovery last year, that has the potential to really add value to the project. And at the northern area of Link, where we were drilling last year, that has really provided a lot of mining reserve to the project moving forward. The deepest hole drilled at Link in the program last year went 22 metres at 12 grams, and it was one of the deepest holes drilled at that end of the project. The deepest hole drilled on the main lode goes down to about 950 metres below surface, well below our current resource. And that is going 6 metres at 16 grams a tonne. We know when we get the right geology here and we hit that shear zone, then we'll get significant high grades. And what we've started to find is there are subtly high-grade plunges within this ore zone that we are looking to target and expand upon. The resource development drilling that's ongoing now will look to infill the inferred material within some of these high-grade areas and help define those high-grade plunges. On top of that, we're doing some exploration drilling at Paddy's and Pollard. Now, Pollard and Paddy's are these two areas that can add significant upside potential to the project moving forward. Paddy's was a very high-grade discovery of 28 metres at 34 grams a tonne, and since then we defined it over about a 200-metre strike length, and mineralisation starts about 150 metres below surface. We want to work back from that known high-grade mineralisation back towards Pollard, where we're doing a resource drill out now that'll further define this high-grade corridor, and there's a big corridor there to add significant amounts of resource. And that could significantly change our operating plan. We've got 3 declines planned at the UME Gold Project, one being on the main lode, the second being off link, and the third being for Pollard, which Pollard is only a very small scale opportunity at this point in time. It is exceedingly high grade though. The idea would be is to drill out Pollard, get that up to reserve status, and we can potentially start looking to pull that forward within the mine plan. If we're able to do that, we're able to expand upon that opportunity, there is the potential to start looking at really upgrading maybe from our 750,000 tonne per annum mining rate up to that 1 million tonne per annum mining rate, and that starts getting us to 150,000 ounces per annum plus. But the base case of our project is the pre-feasibility study, which is a 7-year life, 100,000 ounces per annum, that'll generate very strong free cash flow yield. At the current $3,700 an ounce gold price, we're talking about post-construction $194 million per annum that this project will generate. The all-in sustaining cost of $1,676 are leading amongst our peers in this development group, and that's predominantly due to our very high grade of the asset. We've got 546,000 ounces in mine reserves and significant potential to expand upon that in the near term with our resource development drilling programs and our exploration programs that we're undertaking at the moment. And like I said, those all-in sustaining costs are not to be sort of scoffed at. Here we are at 1676, and we've priced this, prices coming in at sort of around May, June this year at the top end of where market conditions have been. I've got no doubt that this will be a very profitable mine moving forward, and it'll be able to withstand fluctuations within the gold price and within the operating environment. The processing plant we've designed is about 750,000 tonne per annum, but there is upscaling potential to this. It is a 3-stage crushing circuit with a ball mill. If you're looking at that style of circuit, it has the potential to probably process 1 million tonne per annum. So if we start finding excess material here and being able to increase the mining inventory, for very little capex, we're talking about upscaling this operation. The process method to go forward with is a flotation circuit with an Albion that's effectively an ultrafine grind, and we'll hit it with oxygen for 12 hours to be able to get a 95% recovery from that flotation concentrate. The overall plant recovery will be about a 92%, and we're doing variability test work now over the whole of the ore body to further refine this process plant design. The key next steps for us moving forward are the infill drilling of the resource, as I discussed before, where we've got areas of very high grade that will add significant value and be able to increase our ore reserve. We have the near mine drilling exploration at Paddy's that has the potential to add significant amounts of ounces and additional mining areas to that plan. We are progressing our pre-feasibility study. Importantly, we're going to do a variability test work over the whole ore body, and this drilling program provide enough metallurgical sample to be able to take that forward. We'll commence all the necessary approvals, but considering we're already on granted mining leases and the like, this is a simple development project to get up and running. So the upcoming drill program is 11,000 metres. It's targeting resource infill plus exploration at Paddy's. This has the potential to really upgrade the resource and provide 1.2 tonne of material for metallurgical test work. That's important as we start progressing through the development phase of the next steps of the asset, because as you well know, that process plant designs your biggest capital outlay, and the way that we can refine that and potentially look at cost savings in getting the optimal design, that MET program will inform that. And Paddy's has significant potential. It's on the southern tip of that granite contact. We've had 5 holes or 6 holes into there already that have shown exceedingly high grade. It's a zone of about 5 to 6 metres wide with grade running from 8 grams up to 34 grams. We're drilling to the north of that now. The drill core's been complete, and we're now sending that off to assay with results expected in the next 2 to 3 weeks. It does open up a big corridor. It's a 400 metre plus corridor between Paddy's and Pollard that has very limited drilling below 100, 150 metres depth. We know this mineralisation doesn't kick in till about that 150 metre mark. If we're able to expand between these 2 areas, between Paddy's and Pollard, there's significant upside potential to the resource and the production plan. So why invest in rocks? I guess the big questions is who has a similar scale of resource and grade at the junior development level. At 2.3 million ounces at 4.5 grams, it is enviance of a lot of our peers. In the top 400 metres of this resource, it averaged around 4,000 ounces per vertical metre. And with the exploration potential at both Paddy's and Pollard, there is significant upside to be able to advance upon that. And we'll look to drill that out and grow that resource over the coming months. The PFS has compelling metrics. This is a high-grade gold development and low cost. This will generate superior returns with IRRs in excess of 40% and even at spot prices significantly higher. I think this will be a project that will get built, and whether it's rocks or whether it's someone else, this will be a development asset in the future. We have strong re-rating potential. We're conducting our drill program now, which is our first drilling program in the last 12 months. With a lack of news flow in the previous 12 months, we've traded sideways. This is an opportune time for investors to begin to look at rocks, as now we'll have a strong news flow period on the back of the drilling program and moving forward as we go through definitive feasibility studies and the like. This is an exceptional investment opportunity here at Rocks, where you don't get many projects where you're trading on circa sort of $20, $30 a resource ounce, especially with the potential to grow. Thank you very much, everyone. And if you'd like to hear more about Rocks and the story, come over to the booth and we'll speak to you soon. Thank you very much.